Right, good morning everyone. Welcome back to another live session. Today's Thursday, the 29th of June. We had the European forum yesterday, which was for central banks, or majority of the central bank speakers were there. You had Gov Bailey from the Bank of England, you had Kazuo Ueda from the Bank of Japan, Christine Lagarde from the ECB, and more importantly, Fed Chair Powell from the Fed. Fed Chair Powell's time on stage, I shared a brief video in the group of his time on stage, which was insightful, but I think in line with expectation. Right, nothing's really changed. I have read some headlines this morning, and I'll just grab some, and we'll read it together. So this morning, Fed Chair Jerome Powell speaking in Spain at the Bank of Spain. I wasn't aware there was an event, but let's just read some of the comments from Powell. So the process of getting inflation back to 2% is still a long way to go, right? So that is showing that the Federal Reserve still have to keep rates higher for longer. So that's positive. The majority of the FOMC still do see another 2 interest rate hikes this year. So if you remember at this most recent event, there was rumors and there was, so to speak, a hint that the Fed would pause, and the market sold off. Right, just looking at dollar, we can clearly see it that at the time, dollar nosedived. Right, I still remember wanting to buy it just above 103, and I was completely wrong. That's when I was selling Aussie. Right, I was selling Aussie around year at the highs, and I was completely wrong at the time. And looking at that now, Fed Chair Powell has the opportunity to rewrite some wrongs. Right, he has the opportunity to rewrite market sentiment. So looking at it overall, at the move that we had yesterday, dollar did rally over 0.5%. So a very big one-directional rally in dollar did aid in the sell-off of euro, which I know a lot of you took. Cable was the bigger mover, right? Cable was the bigger mover. Cable has been on the back foot. Pound has been on the back foot ever since the BOE interest rate decision that we had last week, and we've had that follow through to the downside, right? So looking at things overall, it does stem off of a scenario of a dollar higher, right? There really is environment and sentiment for dollar to continue rallying. We do have US GDP today, which I'll run through shortly on the economic calendar, but that also is going to insinuate a risk-off scenario should growth start to decline as it has been, or continue to as it has been, then you really are going to have that follow through in risk. So possible scenarios, I really do like cable anywhere into 127. It's a nice little round number. We'll go ahead and add an alert on that one. 127 is of interest. It is a nice little technical level, nice little round psychological level too. And I would like to see price back up into that region before even considering to take a trade. So technically, I'm sure you can all see why I favor that price. That is where the risk reward would be. Right? If there was a trade to sell the pound, it's that over there. Alternatively, we could have had that rally into 128, but we didn't get another attempt into 128. In terms of the euro, I know a lot of you are still short euro from 109.50. 109.50 was a beautiful little level. We came straight back into it. We printed that right shoulder. I am personally then looking for that continuation to take out these fresh lows. So as an intraday little target, you could target 108.50, which would be 100 pips from entry. Looking at the prior trading day, it is important to note that yes, as much as we want this lower, there is a scenario where these dips constantly get bought down here. So if you do look at it objectively, it is trapped within this range, pretty much an inside bar, where for the past 1, 2, 3, 4, 5 trading days, we've been stuck in a 50 pip range. Why? Right, you've also got an ECB that remains slightly firm, slightly aggressive, despite growth, despite inflation, despite high rates. They still have their mandate, and their mandate is a single mandate. They're not like the Fed, right? They don't care about unemployment. That's each country's job in the European Union. They have a price stability mandate, which is stable inflation. So I still favor this lower, but I am going to be objective. I am going to remind myself that nothing will ever move in a straight line. I need to remind myself that I cannot control every tick in price, and neither can you. So your best bet every single trading day and every single trading session is to look for that risk reward for where it's relevant, where it suits your bias, and where you would be okay with taking that trade. For example, looking at cable, yes, you might like cable lower, but it is only relevant out of 127. So 60 pips higher. If it gets there, carry on. If it doesn't, carry on either way. Right? You just don't take the trade. Dollar CAD, beautiful little rally on dollar CAD. 134 is still in sight. I do like this little one directional rally that we have had. This does stem from oil lower, dollar higher. So a full dollar firm risk off scenario. In terms of technical analysis, if you want to go ahead and map out where something would slow down, you can measure the height and size of a falling wedge to go and measure the target. So we've hit that pretty much. If you look at it and you want to measure the legs, we have had that extension into the high. I am still leaning on price correcting at some point. It will be extremely annoying if price hits 134 without a correction, but I am aware that we will have, even into next month, we will see that correction. That correction in the price action looks exactly the same as how euro looked in the start at the start of June. We had that massive impulse. Your job, and just really follow this closely, your job is to buy any dip that we may have. So I still stem with a bias, and I would like to still buy the dip on it. Flipping it from the low to the high does line up with that level that I have yesterday. So that level is still intact. 131.75 is still a valid level to buy dollar CAD at some point. So once that, if and when that level triggers, it is a valid price for us to go ahead and buy. In terms of the yen pairs, dollar yen trading above 144. Kazuo Ueda yesterday on the panel didn't say much. I feel he's a shambles. He's not really standing to his ground as he should as a central bank leader. They have, in my opinion, married the scenario of a loose policy. And until that changes, I'm not really looking at showing anything just yet. Pound yen, euro yen, obviously a little bit of a wobble yesterday because of a net weaker pound and euro across the board at the time. So in terms of relative value, dollar yen was the bigger mover on your yen pairs. Pound Aussie, Euro Aussie continuing to stretch higher. Each dip keeps getting bought. If you want to intraday trade it, feel free. But just keep in mind that the biggest scenario does stem with it trading higher for now. In terms of Euro Aussie is now trading 280 pips higher from our short bias early on in June. On Monday this week, I eradicated that bias, and it is purely evident that it was correct that we did that. Why I do this, folks, is to lose less. My initial thought process behind this was not to win more, because if I wanted to win more, I could have been jumping on the back of these positions. My main focus this whole year, as you have heard me reiterate, I'm sure you're tired of my voice, but your main focus, if you really want to make more money, is just to lose less. So I want you to take a look at your own trading and ask yourself, was there points in time that I was trading against bias, against dollar sentiment, just because I wanted something higher or lower? Right? I've done it. Right? I've done it with the yen pairs. When I short pound yen, even when I knew there was a dovish Bank of Japan, I did it. I got it wrong. I haven't traded it since. So look at things objectively. Look at your own trading. Realize and ask yourself, if I have lost a trade, this is simply a signal that there's an area of my trading that I need to improve on. What may that be? Looking at sentiment, realizing that if I am going against sentiment, it's like swimming against the current. It's going to be extremely hard. You are going to have a lot more resistance on that path. And your main job as a trader, in my opinion, is to follow the path of least resistance. Shout out to Alexander on this call for developing the spreadsheet and really working on his view and to create a risk on risk off tool that, yes, does like require manual input, but it's about finding a trade and a path of least resistance to go ahead and find that relative value position. Crypto, Bitcoin traded slightly lower or below 30,000 yesterday, but that dip constantly got bought. So just looking at the price on the lower time frames, are stuck in these little ranges. I do expect a bit of a breather into 28.5, so I wouldn't recommend buying at the highs. Do just allow a bit of a correction if you are buying crypto. In terms of Bitcoin dominance continues to rally. So do expect further pressure on the altcoins. We'll more than likely see a rally into 57% on BTC index. What that means is the total market cap, more flows are flowing into BTC. By definition, one of my old mentors or someone I used to work with, big in the crypto space, multi 7 figures, used to tell me that the higher Bitcoin dominance goes, obviously the lower your alts will go, but that is a dollar cost averaging window into your alts. Because if your Bitcoin dominance starts to diverge, that means money is flowing out of Bitcoin dominance. And you can look at your total market cap too, which is your altcoin market cap. So let's try and get it up. So the higher Bitcoin dominance goes, the lower your altcoin market cap will fall. And essentially, that will provide you opportunities to buy the dips in the likes of XRP, Cardano, Avalanche, Link. I know it's extremely painful and I know it's extremely excruciating to just buy the dip and hold. But if you are involved in the crypto space, just know that you're dollar cost averaging your way in, or you should be, for that greater yield, right? Nothing's guaranteed in this space. It is a totally new market. So don't bet your life savings on this one trade hoping you're going to become rich. In terms of risk, I do still favor selling the rallies at some point when risk is ready. I just need lower pricing first. So that means I do need $1 higher. In terms of oil, in terms of gold approaching 1900, beautifully on the decline. I do think at some point in the month of July, we are going to have a relief correction, which in my opinion could get sold. So if you are in the short on the way down, lock in your profits, enjoy it, call it a month, in my opinion. Well, the likes of oil as well. Looking at the prior trading day, there is a bounce out of this level. We've witnessed it time and time again. So in my personal opinion, if you've had oil this month, keep it. Keep it as a green month on this pair, and just review, go to another trade, right? Trade something else. Oil, I do see trading at 71, possibly 71.50 again at some point in the month of July. So that could be something that we could take advantage of. So just keep that on your radar. FTSE, we've obviously tracked this from the high. It's phenomenal to see where it's trading now, in all fairness. Should we see 75.50, I do favor keeping my eye on it. But given this correction to the downside in the pound, we have had a bit of a relief rally in the FTSE. So 76 is 7,600 likely into July? Yes, of course it is. Right, of course it is. We still want to shift our focus to selling the rallies. That should be your focus right now, in my opinion. In terms of euro today, what could we look out for in the US session? Should there be a position? If you didn't take this yesterday, what would that position need to look like for you? I would say anything into 109.30. Why did I say that? 109.30 is half of yesterday's move. So if you fib it from the high to the low, it will line up anywhere between your 50 and your 61.8. This just runs in line with the prior trading day. This just allows for some profit taking, but this also then gives you that risk reward. Why do I do this, or why would I suggest you do this? So that you don't get trapped. You don't find yourself selling at the low, And then the market just keeps going higher, and before you know it, you're moving your stops and you're creating bad habits for yourself. So if you didn't take this yesterday and you're looking for it today, 109.30 into the US session could be something of interest. So briefly run through the economic calendar. We do have GDP later today. Just give me 2 seconds. Consumer confidence, I did include it in the daily briefing. Consumer confidence in the Eurozone out now at 10 a.m. And then more importantly, US GDP over the quarter. US GDP over the quarter expected to shrink almost half. Right? So look at that slowdown. That slowdown is extremely big. And if you really listen to that video that I shared yesterday in the market updates section, that Powell suggests that a slowdown is imminent. A recession might not be likely, and these are his words. A recession might not be likely, but it is still possible. What is a recession? A recession, by definition, is a shrink in GDP of 2 consecutive quarters. That means the economy has contracted for 6 straight months. So we want to keep that in mind. If that is the case, then do expect a dollar higher risk off scenario, which will aid us in selling rallies in euro, Aussie, pound, buying dips in dollar CAD. I'd leave the yen pairs alone for now, unless you're buying the dips. But there is loads of opportunities, right? Even if you want to sell a Kiwi, I know we've got the Kiwi Club in the group. If you want to sell a Kiwi, if you're looking at selling rallies in the Kiwi, your best bet would be, I'd say, right, 61, 61.20. Alternatively, just wait for these legs, right? Go ahead and measure them. 61.50. Should we see 61.50 into the month of July? Then that's another trade, right? That's another trade. 30 or 40 pips stop. Don't need any more on the Kiwi. And then you look for lower pricing, 60 at the very least. This will stem from a dollar higher risk off. China's struggling at the moment. All right, they really, really are. And I don't see anything that's going to help them because Euro is struggling, America's struggling, UK is in the shit. Everyone's struggling. So there isn't that optimism, there isn't that demand, and China needs demand. They are a net exporting country. Right? Everything you buy says made in China. iPhones are made in China. MacBooks are made in China, right? Or assembled. So if you look at it that way, people aren't buying as much. There's not much demand. China's really in the shit. Should you be selling Aussie? Probably. Should you be selling Euro, Aussie, Pound, Aussie yet? Possibly not yet. Right? That bias may still stand, but just let it go for now. Right? That's it, really. Aussie, didn't see 67.50. We might not see it anytime soon. If we do see it, possibly in the month of July, fine. Alternatively, if you want to just sell these intraday rallies, feel free. What would that look like? That would look like price action tapping into these previous lows. You ideally waiting for the reversal or slowdown in price action. Anything along the lines of this. Right, and what happens when we have that initial reversal? You're waiting for the correction before the continuation in that direction. So should we see these previous lows come and get tapped, then by all means, it's worth a 30 pip stop. Once the market slows down, has that reversal correction, and you're looking for that continuation, then it's worth a 30 pip stop by all means. Alternatively, focus on the euro. Should we see 109.30? And yeah, pound 127, excuse me. Euro sterling obviously trading higher amidst a very weak pound, but I wouldn't be buying it. I'd be focused on selling it. So should we see these lows come and get retested, we'll monitor price, we'll wait for a reversal, and we could consider it. Alternatively, should strength continue, should the pound really get hit over the next couple of weeks, at some point, could we still see our beautiful number of 87.25, 87.30 get hit in July? Maybe. Could we have that correction? Why not? Could we then sell it? Yeah, why not? But we'll need it to get up there first. Dollar CAD looks really good. So we'll definitely see 135 at some point. So just keep it on your radar. That's the whole market really. Euro Swiss. Should you wish to buy dips in Euro Swiss, let's add this alert. Feel free. That would be nice. It is a slow mover of a pair, so don't expect big moves on it. Yeah, that's it for me. Anyone want to add? Anyone got any questions? Is everyone all right? Cool. Anyone looking at anything else? No? All right, well, I'll end the recording, see if anyone has anything to add.